Good morning. This is Horizon's Middle East and Africa, our top stories this morning. It's been a year since Hamas launched its deadly October 7 attacks on Israel. The Jewish state now locked into a multi-front war with no clear end. Asian stocks rise after a blowout U.S. jobs report sparks hope of a soft economic landing. Chinese markets gear up for a strong opening session tomorrow. And on our Mideast Money segment today, mergers and acquisitions in the Middle East and North Africa are set to gain momentum, with the UAE and Saudi expected to lead deal-making. Well, it has just gone 8 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. We have yet another jam-packed show for you today, and of course, a heavy day today in the Middle East. It is the one-year marking of the October 7 attacks on Israel. We'll be talking about how the country has been responding today and look back at the last 12 months and what has evolved in the region ever since then. But before that, a check on markets. And here you can see that S&P futures are leaning towards the red, down 7 basis points. This after another positive session yesterday, on Friday, I should say. The big highlight of the day were those NFP prints that came in much higher than expectations, very strong still for the labor market coming through from the U.S. The payroll growth number revised up for prior months as well. Unemployment rate declining to lower than expectations. So again, squaring that up with the 50 basis point rate cut out of the Fed at the last meeting is a big question on investors' minds because so far the labor market seems to be doing better than how people had anticipated. So that's a big question we're going to be talking about during the course of the show. Two-year yields now sitting at 3.93. We moved up 13 basis points on Friday. Dollar yen inching closer towards 150. 148.40 is where we are right now. The yen losing some ground versus the USD. And of course, still a lot of eyes on the energy complex. Brent sitting just shy of $78. We jumped about 10% last week on the geopolitical developments. And speaking of those geopolitical developments, let's get straight to it. As Israel marks a year since the October 7 attacks by Hamas, it remains locked into a multi-front war with no clear end in sight. Meanwhile, Prime Minister Benjamin Netanyahu is still weighing how to respond to Iran, which launched a salvo of almost 200 ballistic missiles at the Jewish state last week. Bloomberg's Paul Wallace, who leads our MENA economy and government coverage, joined us here in Dubai. And Bloomberg's Dan Williams, also with us from Jerusalem. Dan, I'd like to start with you and just give us a sense for how the public is feeling today. It is the one-year marking since the October 7 attacks.
Exactly. I'd say it's a day of commemoration. It's a day of mourning. It's a day of taking stock. It's a day of reckoning because not only has the past year, in fact, past year and 31 minutes, literally people have been marking the minute at which this began on October 7th, 2023, 6:29 in the morning. I happened to be awake and working at that time, so I remember it very well. I think they also acknowledged that this past year was unprecedented for the country, in many ways for the region. But I think there's acknowledgement as well that no one really knows how this will further unfold. Fighting continues apace on several fronts and appears likely to escalate on a regional level. So it wouldn't be a standard commemoration where a community, a country, a region just looks back. I think everyone is also trying to look forward in terms of when this conflict might end and how it might play out.
Paul, and just picking up from where Dan finished there, which is people are looking ahead as to how this conflict is going to play out. And of course, Israel now is engaged in a multi-front conflict. You talk about the tit-for-tat with the Houthi rebels. Again, a lot of speculation as to how they're going to respond to those ballistic missiles fired from Iran, but then a real intensification on the Lebanon border, and also airstrikes in Beirut. So just give us the latest on what's been happening there.
Hi, Jemana, you're absolutely right. And as devastating as October the 7th last year was, I'm not sure many people would have predicted just how many fronts Israel would be fighting on a year on from then. In Lebanon, the Israeli bombardment of parts of Beirut and southern Lebanon continues. It continues to target Hezbollah. It's trying to assassinate its commanders and destroy its infrastructure. In the south of the country, it's still a bit unclear just what is going on in terms of how many Israeli troops are on the ground, how deep into the country they are, and also how they're faring. The IDF has suffered some losses. It says that Hezbollah has suffered way more. And the IDF is making out that it is making progress in clearing out Hezbollah from its positions in southern Lebanon and destroying what the IDF sometimes refers to as its attack infrastructure, essentially the facilities and sites that Israel says Hezbollah uses to attack Israel.
And of course, keeping a close eye on the ongoing airstrikes that are happening around central Beirut as well and other parts of the country. Dan, let me just come back to you, because it's been 4 or 5 days now since Iran launched those ballistic missiles directed at Israel, and most of them were intercepted, though not all of them. And there is speculation that the reprisal from Israel will be coming soon. Do we have any further intelligence on what that potential reprisal could look like? And of course, U.S. President Biden sort of waded into the debate over the weekend as well.
Well, that's anyone's guess. What's so remarkable here is Israel has said pretty much from the outset that retaliation would come. It appears certain. And we appear to be past the stage of empty rhetoric. So I think the Israelis have credibility here. At the same time, one wonders how much operational secrecy can be preserved when the telegraphing is so overt. So for those outside the immediate circle of Israeli leaders who are privy to this planning, one can only look at the public markers. One of them is the Israeli defense minister has been invited this Wednesday, 2 days from today, to meet his American counterpart in Washington. One would presume that this would not happen during or in the immediate aftermath of the attack. So perhaps we now have 2 days of further waiting. The big question also is to what extent the United States, Israel's most important ally, an ally that is now in the thick of a U.S. presidential campaign, will want to go along with Israeli retaliation that it would perceive as unnecessarily, unjustifiably, unacceptably destabilizing a region that it really wants to see kept quiet, certainly in the short term. So I think those discussions between Israel and the United States will be very intensive right now. And I'm not sure we can anticipate anything in the coming hours or even the next 2 days.
Yeah, and also on that point, I would direct viewers of this program to read the big take that you and your colleagues put together about the U.S.'s limited leverage on Israel. So that's on the terminal today, the big take by Dan and colleagues. Bloomberg's Paul Wallace, thank you so much for joining us. He leads Armenia economy and government coverage, and Bloomberg's Dan Williams in Jerusalem. Thank you. All right, let's now bring in another voice. Niamh McBurney, Associate Director at Control Risk, joins us from Riyadh today. Good morning to you, Niamh. Let me just start off by asking you, of course, this is a heavy day for the Israeli public. And you look back over the course of the last 365 days, and the question really is whether the Israeli public is in a more secure or less secure position than it was exactly 1 year ago. And I guess the answer to that question is debatable, because Israel is engaged in a multi-front conflict right now.
Absolutely. I mean, we would lean towards the view that right now Israel is less secure, but that is because the IDF is engaged on a path where it aims to make the country more secure in the medium to long term. I will say at Control Risks, we had expected that Israel would not engage in a multi-front war. We've been saying this to our clients for much of the last year, but during the summer, something shifted. And what shifted was the ultimate lack of response from Iran and its proxy groups to various provocations. And I think that's something those of us in the analyst community who watch the region closely honestly couldn't have expected, given that this was the first moment in 40 years that the resistance could choose to confront Israel that it considers its enemy. And on the flip side of that, Israel has taken the opportunity to confront these countries and groups. And so we find ourselves where we are, which is Israel on a multi-front war, question marks about how certain countries in the region will respond, and ultimately a really difficult situation that we do expect to continue for the next several months.
Niamh, how far do you expect Israel to go with the Iran reprisal?
It's our expectation that they'll focus on military and intelligence-related targets, as Iran did in its own attack last week. We have low confidence, so it's relatively unlikely that oil and gas infrastructure will be targeted. But we wonder if there could be some token related infrastructure. There is some petrochemicals infrastructure that could be targeted in cities, industrial hubs close to the Iran-Iraq border that would serve as a signal, but not anything that would drastically impact global oil and commodities markets, which is a key concern, to be honest. So, frankly, we expect to see something similar, but we feel that we're on the upwards trajectory of an escalation pattern. But to Dan's point earlier, it's clear that the US is exerting what leverage it can to try and manage this situation. So ultimately, that's positive. But in the way that we maintain that Iran responded before, Israel will respond to the attack of last week.
Yeah. Well, the most active front that Israel is engaged with right now is occurring in Lebanon. You've got the ground incursion. And again, my colleague Paul was highlighting what has been going on the border, though it's unclear at this point. There's a lack of information about the border fighting, but then airstrikes, heavy airstrikes continuing around central Beirut, South Beirut, other parts of the country too. What do you think Israel's endgame is in Lebanon?
Ultimately removing the threat of Hamas. And it's tried that twice before, in 1982 and 2006, and was unsuccessful. It's now trying a third time. We're seeing a slightly different means of engagement on this occasion. So, to your point, widespread, extensive, and really quite dramatic and destructive airstrikes are being undertaken. We do expect there to be engagement on the ground, probably Israeli forces moving deeper into Lebanon. But at this point, they're using their air power to try and minimize as many threats to their soldiers, once they get moving. We don't expect Israel to seek occupation, but this is going to be a major operation.
Yeah, and you said Hamas there. I'm sure you meant Hezbollah, but just put it down to it being early in the morning. Niamh, thank you so much. It's always a pleasure to chat to you. Niamh McBurney, Associate Director at Control Risk. Thank you very much. Now, up next, analysis on the energy sector with Dhabi Capital as oil traders await the next move in the Middle East conflict. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Well, traders have trimmed bets on supersized rate cuts by the Fed for the rest of the year. A strong U.S. jobs report reignited wagers on a no-landing scenario where growth remains intact and inflation reignites. Attention now turns to the FOMC minutes and U.S. CPI print due later this week for more signals on the Fed's rate path. And let's also not forget it's the beginning of earnings season as well, with JP Morgan, Wells Fargo, and BlackRock reporting at the end of this week. So let's bring in Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Many people were saying after Friday's print came through that the 50 basis point jumbo cut was actually a mistake. What do you think?
So, yeah, it's quite interesting, Jumana. Of course, the payrolls were literally a home run. I mean, nobody was expecting 254K payroll strength. And I don't know if it was a mistake, the 50 bips cut, because, we also heard before this 50 bips rate cut that not cutting in July was a mistake. So, it's always, hindsight is always 6 by 6, like they say. So I think it was the right step for the Fed to do this 50 bips rate cut to ensure themselves against a future policy mistake. But I think right now, given the strength of the economy and given, the GDP data that we are seeing, the strength in the labor market that we are seeing, and in general, benign inflation, going forward, definitely we can expect lower rate cuts.
Well, it is at the beginning of earnings season this week, towards the end of the week, some of the financials kicking things off, also Delta. And I was reading a report from Bloomberg Intelligence Intelligence, saying that the expectation is for earnings growth of just 4.7% this quarter. That is down from 7.9% at the last quarter. So there is earnings growth moderation coming through, and yet valuations are a lot higher. It just feels like the bar for stocks to keep moving higher is a lot higher than it was a couple of months ago. And so is there not room for disappointment here?
So I would say that in terms of the earnings growth expectations per se, they're not so high. And, that was also because all this anticipation about the economy weakening, the consumer weakening was building up into these expectations. In general, the narrative was that, after the jumbo size rate cuts, there's definitely some weakness in the economy, which the Fed is noticing. The labor market is falling off a cliff, as a result of which the earnings growth expectations themselves have been tempered a bit. And despite that, what we've seen is the economy remains fairly strong. The consumer is also strong in the US. So I think to meet this kind of earnings growth expectations not so difficult. Where we do feel it might be tough to meet expectations is the valuation front. The valuations are looking a little bit stretched, but they have looked like that for quite some time now. And unless we really see a negative catalyst that is impacting the stock market, we continue to see a steady run.
Yeah, well, let's talk about another market that's under-owned at this point, and those are Chinese equities. My colleague David Inglis just flagged to us that these Chinese A50 futures are up 15% over the course of the week. Obviously, China has been out for holidays, so there is an expectation we're going to see a mega opening tomorrow once these Asian markets return. How are you thinking about the rally in Chinese and Hong Kong stock markets here? Do you think they have legs?
So I think we are really a little bit, we are playing it as a tactical trade. We are long in China as of now because this was, like you mentioned, a very under-owned market in terms of valuations as well. It was the most undervalued market if you compare it across the markets, on the globe. So from that perspective, definitely this trade was an inviting trade for us. However, from a long-term durability perspective of the trade, we are a bit skeptical because, these stimulus measures, they are huge and they will have an impact, but we need to see that impact. And there are a lot of structural issues in the Chinese economy. I've been traveling a bit in the last 1 month or so. I've been meeting a lot of business leaders and I've been trying to take their opinion on what they think about China. And they all recognize that there are structural issues such as overcapacity, deflation, demographic issues which are there in China. So we really have to see if this stimulus is able to impact some of those things and bring them back on the right track. And from that perspective, we are still a bit skeptical.
Yeah, makes sense. Rashmi, thank you so much for joining us today on the show. Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. And of course, we are keeping a close eye on what these Chinese stock markets do when China's back from holiday tomorrow. Well, coming up, oil is trading lower as the market waits to see if Israel will retaliate against Iran for a missile attack last week. More analysis next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersace in Dubai. Well, oil is trading lower today as the market waits to see if Israel will retaliate against Iran for a missile attack that was launched last week, with President Biden discouraging a strike on Iran's crude fields. Now, joining us now is Bloomberg's Stephen Tuchinski. Stephen, look, today oil is trading lower, but of course we were up 10% over the course of last week. What are the scenarios that traders are watching out for here, and how are prices likely to react based on how these scenarios come through?
Right. Traders are in a wait-and-see situation, and they're kind of playing out 3 or 4 different ways that this could go down. First, Israel does actually attack the infrastructure for oil production in Iran. If that does happen, and Goldman said if it takes about 2 million per day barrels off the market for an extended period of time, let's say 6 months, you could see oil rise to about $90 a barrel. I think there's a widespread view that in that case, potentially OPEC Plus could come in and increase production to make up for that shortfall. And therefore, that increase in prices would be short-lived and you'd see it come back down. If OPEC Plus does not come back, then you will see prices sustained in that $90 level for higher, potentially rising to the mid-$90 level. In the scenario where there is an attack on Iran's infrastructure, let's say just some downstream facilities, it just takes out about 400 to 500,000 barrels a day, then you could see oil rise maybe above $80. We've been testing that $80 range right now. We're about we've been testing that $80 range right now. We're about $78, $77 right now for Brent. If you are seeing any kind of attack, you would probably rise above 80, and then you'll figure out, okay, how much actual production is affected. And then, of course, if there is no attack on oil infrastructure in Iran, then I think you'll quickly see prices in Brent and WTI quickly deflate. And that's been the case in previous instances when the market was bracing for Israel's response.
Yeah. Well, you raise a very interesting point, which is that OPEC Plus certainly have the capacity to pump more oil should they need to step into the market. And that has been one of the features that has been weighing on the oil market over the last 6 months. So what are the fundamentals actually telling us right now?
Right. I mean, the market is essentially in an oversupply. Demand out of China isn't really impressing anyone in the market. U.S. demand is also showing a little bit weak when there are some questions about the health of the U.S. economy going forward. You've also got really pretty resilient U.S. shale production despite the drop of prices in WTI into that $70 range. And then, of course, as you mentioned, OPEC Plus. They're going to be adding barrels to the market at the end of the year. They pushed back their plan to increase production by about 2 months. So December, you're going to see about 180,000 barrels a day added, and then gradually through 2025, you're going to increase. But that is a bearish element because in a market where demand is relatively weak, when you have strong production outside of OPEC Plus, the fact that OPEC Plus is coming in and adding more barrels is something that will continue to weigh on the market. And they do certainly have the capacity to come in and help balance things if there is a geopolitical situation affecting prices. But I think right now, the increase in oil is not really based on fundamentals per se. It's this war risk premium and people sort of hedging their bets, or rather taking no bets when it comes to this situation and making sure that they're in a safe place if Israel does do some sort of response.
Yeah, and one of our colleagues in London, Valerie Title, was just flagging that the bid for some of these calls, the 25 Delta calls on WTI, has gone massively up because people are positioning for that potential upside risk. Bloomberg Stephen Safinsky, thank you so much for giving us the latest on what's been happening with oil. Now, elsewhere, Boeing is returning to wage negotiations with its largest union as strikes enter the 4th week, impacting the plane maker. Both sides will return to deliberations with a mediator on Monday. Workers are still holding out for better pay and pensions, ongoing issue for Boeing that we've been tracking over the last couple of weeks and weighing on the company. Well, coming up, as Israel marks a year since the October 7 attacks by Hamas, it's locked into a multi-front war with no clear end. We are live in Jerusalem next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. It's been a year since Hamas launched its deadly October 7 attacks on Israel. The Jewish state now locked into a multi-front war with no clear end. Asian stocks rise after a blowout U.S. jobs report sparks hope of a soft economic landing. Chinese markets gear up for a strong opening session tomorrow. No change in Tunisia. Incumbent President Kais Saied is poised to win a second term after cracking down on the opposition. It has just gone 8:30 a.m. across the Emirates. I'm Jemana Versace in Dubai. Picking up where we left off on Friday, we got a very strong non-farm payrolls print blowing through market expectations for the headline figure. Also, unemployment rate ticking down lower, which also was a positive surprise to the market. The market was quick to unprice some of the rate cuts that were priced in. Now we're sitting at just over 50 basis points of rate cuts priced in by the end of the year. The S&P saw another strong close on Friday. Today we're dipping a little bit. The futures not really doing much, trading sideways. But then again, we're still up 20% for the year. You have to watch out for CPI numbers coming through on Thursday, in addition to the beginning of the earnings season to watch out for in terms of potential market drivers this week. Two-year yield sitting at 3.93, again moved up 13 basis points once that number came through on Friday. So substantial moves in fixed income. Dollar yen also reacting to the strength of the greenback here. So dollar yen just sitting just shy of 150 now. 148.40 is where we are at. The yen cannot keep its rally momentum up versus the USD given the stronger data. And then Brent, as we were just talking about, just sitting below $78 here, about 0.4% weaker, though we have moved up about 9% over the course of the last week on expectations of those Israel reprisals to the Iranian ballistic missile attacks. So something to watch out for, of course, there. Now, switching on, just a quick look at the terminal chart today. We are also anticipating the reopening of Chinese markets. And I just wanted to flag that Chinese futures are up 15% over the course of the week that these Chinese markets have been closed for holidays. So we're gearing up for a very strong opening yesterday. The Hang Seng, just to give you another data point, is 30% higher than the closing mark from 3 weeks ago. So very, very strong momentum in some of these Asian markets. But for now, let's turn back to our main geopolitical stories in the region. As Israel marks a year since the October 7 attacks by Hamas, it remains locked into a multi-front war with no clear end in sight. In an interview on CBS 60 Minutes, Democratic presidential nominee Kamala Harris says she won't stop pressuring Israel to end its military campaign.
The work that we do diplomatically with the leadership of Israel is an ongoing pursuit around making clear our principles, which include the need for humanitarian aid, the need for this war to end, the need for a deal to be done, which would release the hostages and create a ceasefire.
Let's bring back Bloomberg's Dan Williams in Jerusalem. Well, it's a year on since October 7. What are the prospects for this conflict ending? It's been going on for a year now, Dan.
Well, I can tell you what the prospects are not when it comes to the Israeli leadership. Prime Minister Netanyahu, his senior cabinet ministers, his aides are simply not interested in Israel ceasing fire unilaterally. They see this as tantamount to yet another, what's often called a round of fighting with Hamas or Hezbollah, and they don't want that. They see Hamas as having really carried out a game-changing attack on Israel a year and an hour ago, and they now have decided to change the rules of the game, meaning, as they describe it, victory. Now, while the Israelis may find it hard to articulate what victory looks like, they certainly know that it will not look like previous ceasefire agreements, always mediated because Hamas and Hezbollah and other Iranian-backed groups do not engage with Israel directly. They want Israel's destruction. They do not want another ceasefire here. They want a situation where the threat posed to Israel going back months and years is no longer there. And by Israel's account, the country, its citizens' army are willing to pay the price for achieving that, whether it takes days, whether it takes months, or even years.
I want to pick up on the comments that Kamala Harris made in that interview yesterday, and everyone's keeping obviously a very close eye on what she has to say about U.S. foreign policy and specifically the situation in the region. But she did say she will not stop pressuring Israel to end its military campaign. How is this U.S. election factoring into Netanyahu's calculations, if at all, Dan?
I think it's a major factor, although that will not be publicly acknowledged by anyone in office in Israel, given the convention of not interfering in the internal political affairs of another country, certainly not a world power and a major ally like the United States. However, I think it's beyond dispute that this election season, the election campaign, the few weeks left until the November ballot, are potentially a window of opportunity for Israel to take major action. Why? Because neither candidate would want to rock the boat and perhaps erode his or her support base by openly taking on Israel. Keep in mind that Israel is a matter of bipartisan consensus in terms of supporting Israel within the United States. And also, I think the Israelis are factoring in the fact that Kamala Harris could be elected as president and take office come January. So on the assumption that she might be better for Israel's, that Trump, the contender, the rival, might be better for Israel's interests, or at least the interests of this Israeli government. The Israelis might think that they now have a few weeks or just a few months in order to undertake major action in the region to reshape the region in a way that would seriously cut back, degrade the threat Israel sees from Iran and from its guerrilla proxies on Israel's borders.
Yeah. Bloomberg's Dan Williams, thank you so much for your reporting today from Jerusalem. Now, Tunisia's incumbent president, Kais Saied, is poised to win a second term after cracking down on the opposition. His near certain victory in Sunday's vote may signal more economic hardship for Tunisians battling high living costs, but may help advance the European Union's migration goals in North Africa. Let's bring in Bloomberg's Ndiro Ganga for more. This was always going to be an interesting election. It is the third such presidential election since the Arab Spring. But at the same time, turnout has been quite low on Ndiro, and many people were disheartened by some of the practices put in place by the incumbent into Sunday's round of elections. So just give us a sense of how the feeling is on the ground right now and what the current situation tells you about how many of the public view their political future.
Jumana, you've gotten it absolutely right. While the president is projected to win this election by 89%, this victory is not as monumental as it was in 2019. First of all, only 2.7 million people showed up to vote as opposed to the 9 million registered voters. It's only 27.7% in comparison to 2019 when it was 49%. If we also look at the list of presidential candidates, only 3 were on the ballot. The president, a competitor, considered his ally. Another one was in jail. 14 candidates submitted their bids, but it was only shrunk to 3. If you compare it to 2019, 28 candidates were allowed to vie. So many of his supporters showed up to vote, but also many decided to stay at home and boycott this election, as if to send a message to the president, who's been accused of carrying out a constitutional coup. He introduced a raft of political reforms that enabled him to consolidate power. And because of this, he fired the prime minister, he dissolved parliament, he dissolved the electoral commission, and he dissolved the Supreme Judicial Council. There's also dissatisfaction on the economic front. Unemployment 16%. The government also had budget shortfalls, and there was no revenue for subsidies on goods such as rice, sugar, flour, driving up the cost exponentially. Tunisians are taking to the streets, not only protesting the political reforms, but also protesting socioeconomic issues such as water scarcity and salary payment. So there's a great form of dissatisfaction in the country with the president.
Yeah, I was reading a commentary about the situation. They're saying that it's drifting towards an authoritarian regime. So what does a second-term victory look like, and what does it mean for the country?
It's a double-edged sword. One, Tunisia has a new friend in Italy. They signed a controversial immigration deal that was to help reduce the number of illegal immigrants getting to Europe. And this number has reduced by about 60% to 50,000 only arriving by boat. Giorgia Meloni is trying to expand this deal to the greater EU, get 5 billion euros to come to the continent, including Tunisia, to go into investment in energy and food security to discourage illegal immigration. EU also has a deal with Tunisia, but it's yet to be implemented. The bone of contention here is the president, whom they view as unpredictable, and his nature could not only delay but also derail the implementation of this deal. Then there's debt, which is on the spectrum of debt distress. This is a country where talks with IMF for $1.9 billion bailout package fell apart because the president termed conditionalities on removing subsidies as foreign diktats. And so this country is just surviving by windfalls on olive oil, money from Saudi, Afri-Exim Bank, but their revenue that will be used to service debt is projected to grow to 41%. So they need a long-term solution to their debt crisis.
Yeah, absolutely. Thank you for bringing us the extensive analysis of what has gone down in Tunisia with these elections and what to expect. Ndiro Ganga from Kigali, thank you. Now, in the Congo, authorities have begun vaccinations against Mpox nearly 2 months after the outbreak started spreading. Nearly 265,000 doses donated by the European Union and the U.S. were rolled out this weekend in the eastern city of Goma and North Kivu province. More than 34,000 suspected Mpox cases have been reported across 16 countries in Africa this year, with 866 deaths. Coming up, we take a deep dive into what's driving deals activity in the Middle East and North Africa. We have all that analysis next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Deals activity in the Middle East and North Africa region continues to gain momentum. Now, a cross-border survey conducted by Lumina Advisers suggests strength in the M&A market will continue across the region, with 70% of deal makers expecting to see the same or an increase in activity in 2025. Let's bring in Andrew Nichol, Senior Partner at Lumina Advisers. Great to have you with us on the show. So I was just taking a look at the report that Lumina put out. Just give us a sense for how the landscape has been for regional M&A activity over the last year.
So the Lumina report is a survey and a barometer on deal activity. So it really looks at a number of things. So in summary, 70% of respondents saw more activity. They're forecasting more. And in the last year, we saw an increase in cross-border deals compared to the year before, which is quite interesting because it's not just outbound deals, it's inbound deals as well.
Yeah, so one of those big deals that came to the market, came to light a week ago was ADNOC's acquisition of Covestro. This is an Abu Dhabi-based oil company acquiring a German chemicals maker, and obviously a very big deal from an industry standpoint. But what does it tell us about the appetite for some of these M&A deals to become cross-border and to actually evolve into not just money coming into the region, but money coming out of the region as well?
I think that reflects the trend in M&A over the last 2 years. These cross-border transactions really reflect the need for localization. And then that transaction is the height of all of that. So investing into Covestro will identify skills, technologies that can then be brought back into the region and localize.
What are some of the main sectors where you are seeing deal-making take place?
So industrials is highly active.
Yeah.
We're also seeing business services and infrastructure. So anything linked to those government agendas, 2030 in Saudi and the UAE, and particularly retail as well. So those sectors have been particularly active.
Yeah, and is it predominantly money sponsored by SWFs? Is this government? Is it state-owned enterprises? Or are you seeing it also translate into private sector activity as well?
So historically it was SWF and government-led.
Yeah.
But where the government goes, the private sector tends to follow.
Right.
So now we're seeing a lot more mid-market transaction activity. That's the $25 to $250 million deals. So those deals are increasingly happening, and it's both inbound and outbound as well.
And I often wonder what the secondary effects of the deal making is going to mean for capital markets in the region. And one big question here is how these acquirers are raising the cash for financing. Is it still predominantly equity financing, or are we seeing more and more debt financing to get the necessary financing for these deals?
So that's one of the features of the survey. We ask about how these transactions are getting financed. Historically, it was very much equity focused, but this year we saw an increase in mezzanine and hybrid capital financing, as well as some levels of senior debt. It's still predominantly equity, but I think it's interesting that more mezzanine deals are getting done and slightly more complicated transaction
Why do you think
structures.
they are?
I think access and availability of financing has been a challenge in the region. But now, as you find not just equity, but mezzanine providers, you have a number of new industry players coming in, and that's expanded the capital availability for these transactions.
Yeah. What would you say are the biggest roadblocks or obstacles that some of these surveyors that you've spoken to are citing heading into next year? I mean, obviously, geopolitics has to be one thing that's top of mind, but how are people thinking about not just the geopolitical risk, but other risks as well?
So valuations have always been an issue in the region. They've always been particularly high. Deal availability, finding good assets and good companies to buy into. What we've also seen is an increase in the level of diligence. So for any M&A transaction, of course, time is important. You want to close deals as quickly as you can. But also with the sophistication of transactions, we're seeing more diligence happening as well.
What about regulatory hurdles? Do those come up?
regularly hurdles are picked up in the risk and return profile. We've seen distinct improvements across the region, particularly in Saudi and the UAE, and I think investors are getting a lot more comfortable with regulation in the region, and that's what's driven some of those cross-border deals.
And just looking at next year, given we talk about the easing cycle that's commencing out of the U.S., lower interest rates, do you think that will spur even more activity, given, as you said, that some of these companies are leaning more towards debt financing over equity financing?
Well, I think what's interesting is the Middle East starts to compete with global capital. As interest rates come down, more deals will happen in Europe and the US. And the Middle East has become more sophisticated in those deals. It's very attractive for international investors seeking acquisitions, seeking JVs, and expanding and getting access to the region. So the Middle East starts to compete, and I think they're in a great position to do that.
All right, we'll leave it there. Andrew, thank you so much for the overview. Andrew Nichol, Senior Partner at Lumina Advisers. Thank you. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, Saudi stocks are slipping after a summer rally as regional tensions weigh on risk appetite. We're live in Riyadh next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Saudi Arabia's King Salman underwent medical tests on Sunday due to a lung inflammation. That is according to a brief statement from the royal court carried in state-run media. In May, Crown Prince Mohammed bin Salman announced that the king had recovered from an illness after about a week of treatment. And Prince Mohammed was appointed Crown Prince in 2017 and has managed most day-to-day affairs since then. But now let's turn our focus to Saudi stocks, which are slipping after a summer rally as regional tensions weigh on risk appetite. The Tadawul All-Share Index is down 4% in October as Israel intensifies its campaign against Iran-backed Hezbollah and weighs retaliation for Tehran's missile attacks. So for more on this, Bloomberg's Matthew Merton joins us from Riyadh. Matthew, so far, and I guess up until the last month, Saudi markets have been pretty resilient to all of the geopolitical developments in the region, not being the case the last couple of months. So just talk us through why we are seeing a bit of a downturn for Tadawul.
Yeah, as you say, I mean, if you look across the chart of where the Tadawul has been over the course of this year, I mean, it's been a real roller coaster. I mean, it's been up, it's been down, it's been back up, and now it's back down again. I mean, over the past couple of weeks, it had looked like it has had some sort of sense of momentum going upwards and some sort of immunity from what was going on in the wider region with the conflicts going on. But, you know, as the temperature has sort of ratcheted up over the course of last week, then you know, clearly markets in Saudi Arabia and investors here have started to get very, very nervous about that and about the implications of that. You know, we've seen that's also had a big impact on the oil price over the past few days as well. And I think, you know, it's really a sign, you know, I think that, you know, a big part of Saudi foreign policy over the past couple of years has been trying to reduce tensions in the region and lower the temperature. And now we're at a point where you know, that's all going wrong, and the temperature is rising. And, you know, this is exactly what the Saudis don't want in this sorts of geopolitical tensions going on, which are putting off investors from coming into the region, and that's definitely what we've seen over the past few days.
I remember I was speaking to the Saudi finance minister just a couple of weeks after that tit-for-tat, the first round of tit-for-tat escalation between Israel and Iran. And the main word that he said to me was de-escalation, de-escalation, de-escalation. So they've been trying that, obviously, to your point. Just before your segment, we had someone on the show talk about deal-making in the region and the fact that Saudi has been one of the bright spots. Would that be a potential catalyst for the market to move higher in coming months, Matthew?
Yeah, I mean, look, I think what we're going to, what everyone's going to wait to see now over the next few days is how Israel now responds to the Iranian attacks of the last week. You know, there was, of course, over the past couple of days, there was discussions about strikes on oil facilities. The Saudis are obviously very exposed to the fact that, you know, a big part of the economic diversification projects is relying on bringing in construction materials in through the Red Sea. So those Red Sea tensions also sort of weigh on Saudi. But, at the same time as well, the Crown Prince and the Saudi government is still very, very committed to pushing on with Vision 2030. And so as much as some of this tension is going to put off foreign investors, the government itself, I think we're going to still see trying to do its best to continue investing in diversifying the country. And so I think, we'll see markets over the next few days sort of wait to see how things evolve in the region, and if we get a sort of a restoration of that sort of uneasy stalemate that we had prior to last week, then I think we'll probably start to see markets here and around some of the rest of the region start to bounce up again. And of course, if things deteriorate significantly, then I think the markets will have still quite a long way down to go ahead.
Yeah, Bloomberg's Matthew Martin, thank you so much for the overview. Now look at some of the other stories we're following today. Nintendo shares jumped after a senior executive with Saudi Arabia's sovereign wealth fund told local media it is considering increasing its stakes in Japanese game companies. The stock climbed its most in more than a week, outpacing the market. The Saudi government is betting $38 billion on the country's potential to become the next hub for the video game industry. And a quick look at futures before we head out for the day. And here you can see that, one of our big movers over the last week has been Chinese stocks. Now, remember, Chinese markets have actually been out for the last week. But if you look at futures, they're up 15% over the course of this week. And then Hang Seng has capped its best 3-week gain. And listen to this. 50 years, the Hang Seng Index up more than 30% in the last 3 weeks. So something to watch out for as we head into the Asian opening session tomorrow with those Chinese markets coming back. And then this is the picture for S&P futures, down about 8 basis points after better close on Friday. All eyes were on that NFP print, coming much stronger than expectations and spurring a much move higher in yields. We've had the 2-year yield move up about 13 basis points in the course of the last couple of trading sessions. That is it for our show, Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.